This conference will now be recorded.
Okay, so good afternoon, evening all. Looks like Michelle and Elaine. Hi, Michelle. Good to see you, or at least see your black circle with the MW in it. Feel free to video broadcast yourself if you like. No pressure there. But out of all of you, the three of you, Erika's joined in, Michelle and Elaine, certainly with procurement. Out of you that are on time, let's start. I always heard that, you know, you always start on time for those that are on time, and to be able to respect everyone's busy schedule. So I'm William Spriggs with the Bermuda Economic Development Corporation, and I'm joined by Joyce Hayward of Fusion for Business. Joyce is going to be our lead presenter for our next 50-55 minutes or so. It's prepared an interesting and engaging, informative presentation for you, so I'm sure you'll enjoy it. And certainly Katina Weeks, who's providing support for us for this initiative for our partnership with the Ministry of Public Works. Just before we start, just a few things. The aim of this virtual session is to be able to support all those that are on, any construction contractors, maintenance service providers, tradesmen, soft skill, architecture, engineering, anybody in the construction industry that wants to fully understand what's involved with completing the pre-qualification documents package as it relates to the current Ministry of Public Works construction stimulus program. Okay, so Ministry of Public Works is partnered with BDIC, and BDIC is happily design and outreach programs that you may have seen the half-page Royal Gazette ads, all of the radio promos, certainly social media, all of our broadcast to our database, all of the interviews and such, to for us to do our to support the Ministry of Public Works with getting the information out, and all those individuals, contractors, tradesmen, etc., that desire to be able to be pre-qualified, to successfully pre-qualify, must complete the documents package. And so what we've done is break up the documents package into two bits. One is the pre-qualification general documents, which we started at 9 o'clock this morning. We also had a 2 p.m. session, and that is led by Tika Gilbert of Tika Gilbert Architects. And we'll be back on with Tika at 6:30. So that's the general documents, but because the labor rates we view as chunky and meaty in itself, we split that out, and we have two sessions with Joyce, 5 o'clock and 7:30, that are dedicated to financial labor rates. And we're doing both sessions, the general docs with Tika, the financial labor rates with Joyce, 3 times with Tika, this week, Wednesday, Thursday, and Friday, for 12 sessions total. And we're doing 5 p.m. again and 7:30 with Joyce, Tuesday through Friday, 8 sessions. So 20 sessions altogether, designed to be totally convenient for you. Happy to have you on board. Make sure you tell your colleagues, friends in the construction industry that if they haven't heard about it, it's all on our website, bedc.bm. Okay, so we're specifically talking about the checklist Appendix D documents that are on our website. So this is the full set of documents that must be completed in a quality way to be considered with, for Ministry of Public Works to consider you on their pre-qualification list. Just a statement of qualification before I finish up. BDIC is solely focused on assisting you to complete the submission package in the best way possible. Once you complete your package and forward it to the Ministry of Public Works, then you are in the Ministry of Public Works machinery, Peter, because it has nothing to do, no decision making, no input in regards to what happens to your submission once you email it to Ministry of Public Works. Okay, so we're going to chat on the side there. Elaine's popped in there to everyone. That's a private piece, so you can chat to us privately, or you can chat, certainly to everyone. I think most of us know how to work that. Katina and I are going to be monitoring that for Joyce. Also, I believe Joyce is going to do a break at some point during her presentation, or she may decide to go right through. It's totally up to her for any Q&A. But before we get off within an hour or so, we want to fully answer your questions. Okay, so having said that, got Erika Smith there, our Executive Director. Thank you for joining us, Erika. Okay, fantastic. So Joyce, I believe it's on you.
All right. Well, thank you, William, and good evening, everyone. And as we get started, just to get a temperature, we're in 2021, and possibly because it has been a long day, just put in the chat a 1 if you've had a good day or great day, and a 2 if you're just hoping tomorrow will be a better day, just to get us, our fingers at least moving, and just to get a temperature of everyone that's here. So if you can just put a 1 in the chat if it's a good day, and a 2 in the chat if not as great a day, but tomorrow you'll make it a better day. So I see, thank you, Erika, for the number 1 in the chat. And so awesome. We look like we've had great days, good days so far today. So thank you very much. So we are going to be using the chat, as William said, and there will, thank you, Michelle and Elaine, Leslie, appreciate that. So as William mentioned, we are going to be going through what this part of the package is all about, and it's for anyone who wants to apply, whether you have been a government contractor or not. I am, as he said, Joyce Chesley Hayward with Fusion 4, the number 4 business, and we have an external CFO and CPA firm where we help small and medium-sized businesses to maximize profitability. We want to make sure businesses are profitable, and so been in business over 30 years or been in accounting for over 30 years, been in business in the States and here in Bermuda. And so happy to assist and work with BDC as always and to assist. So again, please use the chat if you have any questions. There will be a time we'll stop and you can unmute, you can put your hand up or put something in the chat. I'll go through some information, and if there is anything that you have questions on, please let us know and we can make sure we try to address it, because I want to make sure everybody's on the same page. So first, we'd like to know what type of business that you're in. If you can put in the chat what type of business you're in, because there's 2 types of rates that we may talk about tonight, and one may not be applicable to many of you. So just trying to find out what type of business. If you're here, I know some people are just observing, but if you're here, let us know before that you're looking to possibly look to pre-qualify. Thank you, Leslie. So landscape and property maintenance. Okay, gotcha. Awesome. So that may include both types of rates. So we'll be talking about both of them. Anybody that's applied for a government contract in the past, and if there was anything that you encountered, any concerns or issues, thank you, Dan, and any concerns or issues or pain points that you encountered, especially in the financial area. We want to make sure if there are any things that, the main thing too is if there's one question that you want to have answered tonight that would make you happy when you leave here, that your 1 would be a 1++, put that in the chat as well. Just let us know where we're, if there's anything that we need to make sure we cover that, just in case we hadn't. I mentioned been in business over 30 years, finance, accounting, auditing, government, international business. We help people maximize profitability, and we have a profit freedom program that helps our business owners to be profitable. So still looking in the chat to see if anyone is has a burning question already or knows what they want to go away with that would make them happy. So if there is anything, let us know. Now, as William mentioned, in the package that will have to be prepared for pre-qualification, there is a labor rate portion, and there is an appendix D, as was mentioned, that deals with the unit rate schedule, and there's some checklists which can be found, as William mentioned, on bedc.bm or the link you see there for the government procurement to get to the information that needs to be filled in. So this is just an example of what you'll see when you go to the government site. You can again click on, as you see down at the bottom, bedc.bm, or you'll see that this is on the www site. And yep, we want to make sure that you know how to get there. So the forms that you're going to need are on the government site, but you can get to them very easily when you go onto the BEDC site, and right in the middle of that page about the stimulus package, there is a link to that will take you right here, because you want to make sure you're filling out all of that paperwork and information. So to get right into the labor costing, first, you should think about what type of business you're in. Someone has said they're in landscape and property maintenance. So you have to think whether your proposal will include labor or equipment or both, machinery and equipment. And so for you, Leslie, you may be thinking of putting in labor rates as well as equipment rates. But you need to decide and think about that as you're putting your contract together. You'll need to decide what you are going to include in your proposal. When you think of your labor rates, you need to think of the items that are applicable to you. And you want to think about, for example, with property maintenance and landscaping, are there different types of landscapers? Are there apprentice landscapers? Are there qualified landscapers? Are there different rates that will be used? So all of these things, I'm just making sure we're beginning to think about as you look to put together your submission. You want to think about that it's more than one rate, and you may need to blend your rates, that you may not just say landscaper, you may have 3 types of landscapers, for example. The other thing, as we are looking at costing for your labor, you want to think of all of your costs. And I will say that some of these questions are going to be in a checklist that you're going to get. That's going to be available if you want to download it on the website after the session is over, or tomorrow. They'll let us know when they'll be up on the site. So these are things to think about as you're preparing your information, because you want to prepare the best package possible. You want to be clear. You want to make sure that whenever Works and Engineering is looking to pre-qualify you, that they know that you've understood your rates, and your rates have meaning, because you didn't just pull the number out of the air, but you actually came up with the number from some computation that you actually did and put thought into it. The other thing, you want to consider all of your costs, not just the labor rates, but all of your costs. So your overheads, we're going to talk about that in a little bit. And if you have a list of the things that you've spent over the year in order to come up with your profit and loss, you should use that to think about what your overheads are, what your total expenses are, what your break even has been. But it's something you should begin to document, if you have not already, to make sure that you are tracking and have all of your costs prepared to include in your application. So the first thing we're going to talk about are your direct costs. These are your labor rates. And in Appendix D that was talked about, that's on the website, you'll see various types of labor rates, not rates, like types of labor categories. Managers might be a category you use. Your staff, level 1, as I mentioned, a level 1 landscaper, a skilled landscaper. If you have carpenters, you might have an experienced carpenter, or an apprentice carpenter. You may have electricians. So you need to think about what types of employees you will use and how many of each of them, because that may make a difference in your rates. If you're using 3 apprentices and 1 manager, that's going to give you a different blended rate than if you're using all managers or all apprentices. That's great. And so you need to know what you're going to pay each of your people. That's your direct cost. And you should think about how many hours a day they're going to work, and how many hours, of course, then a week. If it's 5 days a week, you may have a 4-day week. How many hours a month? Because that's going to tie into the computations we're going to talk about. And each person's can be different. And William has put in the chat, thank you, William, where you can get the information. You can click on that and you can see where the forms are, the appendices that we're talking about.
Yeah, hi,
So,
Joyce. Hi, Joyce. Yeah, just before you go on, just while we're there. So Elaine just made it known that the Ministry of Public Works website is not there. It's actually on the government portal, procurement notices. So the gov.bm. So she just kind of made that known to all. So Michelle, but the easiest way that we think is just to go to our website, and up it pops on the home page. You can go right in and everything is there. And also the Ministry of Public Works /gov, all of the relevant documentation you can go to from our site, which is in the chat. Okay, thanks, Joyce.
Sure. Sorry about that. And with that, I think it was asked, are there more sessions? And yes, there are going to be many more sessions that you can register on the bedc.bm site for the sessions. So this is an example of a blended rate that if you had 2 persons at $40 an hour and 3 people at $30 an hour, your blended rate would actually be $34. So I put in 40 2 times, 30 3 times, added those all up, and that's the $170. Then divided that by 5 because there were 5 people and got the 34. So that's an idea of a blended rate or average rate that you would use as your direct cost that you start with. For example, if this is for carpenters or landscapers. So that's an example of an average rate or blended rate that you may want to use if you are using more than one type of level of persons or pay rates of persons. So the next thing I just wanted to mention is this is from the checklist that was just mentioned. This is Appendix D. As I mentioned, there's a unit rate schedule, and it lists the various types of persons that might work with you on these projects or on your jobs. You may have others. There's a long list, so there's like several pages, and you can go to that to see if there's anything or what applies to you. But as you see, they're asking for the unit per hour. They're looking at per hour, and then what the rate is per hour. So as you're looking to fill in this information, you're thinking of a skilled labor and what is that going to be per hour. So for example, we just had a direct cost of a blended rate of 37. That would be what we start with. But that's not how we end, because you have to make sure you're including everything in it. So as you see, you have to include all prices that are applicable to your line of business. So you'll go through that schedule and make sure you're putting these rates in that we're going to give you some information how to compute. So there's direct costs that we just talked about, and then there's variable overhead, we're calling it. These costs are those that are based on how much work is done, how many employees you have. So it's variable. It changes based on the number of people that you have working or how many hours they work. One of the variable costs that you need to make sure you include are your government statutory or obligations: payroll taxes, social insurance, health insurance, pension. Payroll taxes and social insurance is something they're asking in the paperwork. So when you go through the paperwork, they're going to ask you your payroll tax number, your social insurance number. You have to have that, because if you don't, that negates you already from the process. So you want to make sure that you're paying payroll taxes, you're paying social insurance, that you're registered. And these amounts need to be included in your rates. So that's what we're going to be talking about. And if there are any other rates that you have that will change based on the number of employees or based on the number of hours, if there are certain costs that you know you have for each employee all the time that you need to factor in, that's a variable overhead. It's based on the employees' number of hours that they work or the number of employees that you have. Then we have fixed overhead costs. And if there are any questions, please put them in the chat. If we're getting ready to get to the computation, but if there are any questions about that. So then there are fixed overhead costs. And what we're saying is that in order to tell the government what it costs for you to hire somebody, in order for you to make some money off of this process, you have to make sure you're including all of these costs, because otherwise you're not going to make enough money on the project to make it make sense for you. So you want to make sure you have covered everything that it costs you in order to hire and keep employees. So the variable costs, as we mentioned, the government obligations, you have to add that into that. For example, blended rate of $37, there's costs that have to add to that. And then your other monthly costs, your overhead. So there are some expenses that you have no matter what, because your business has to operate. So for example, if you have a facility, an office, you have rent. You have to pay that regardless of whether you get this contract or not, regardless of whether you have 5 employees or 10 employees, you have a fixed cost of rent. You have a phone, I'm sure, whether that's a cell phone or a landline, you have a fixed cost every month for your phone. You have a fixed cost for your internet. You have insurances. There may be business insurance. There may be workman's comp. There may be insurance that's required in accordance with certain contracts. Sometimes that insurance might be paid quarterly. It may not be monthly, but you might pay it quarterly. So if you pay it quarterly, you would divide it by 3 for your monthly cost, because I'm suggesting as we go through this that you look at things on how often you pay it. And most times rent, telephone, internet, you pay monthly. So you would look at your insurance as how much you pay per month. You need to make sure you're tracking your numbers. If you haven't, I really implore you to do so. Know what your total overheads are. Know what your break even is. Know what is it that I have to pay every single month in order to cover my bills. How much do I have to make every single month? Well, that then is probably your fixed overhead. It could be more, but at least you know you have to cover those amounts in order to pay all of your bills and make sure that your business keeps going. So before we get into the computation, want to make sure any questions, everybody's good for right now. I don't see anything in the chat. So maybe you can put a 1 in there if you're with me and you're not falling asleep yet. There's only 8 of us here on the Zoom or on the GoToMeeting today. So hopefully we're all together. Thank you, Leslie. Leslie's still with me. Thank you, Katina, Michelle. Awesome. Okay, so this is an example, and we are going to have a spreadsheet that has this example in it, and there's going to be, thanks Elaine, and there's going to be a spreadsheet or a tab in that spreadsheet where you can put your numbers in yourself. And so thanks, Enrica. And so where you see the yellowish orangish color, those are numbers you would put in, and the computations are in the spreadsheet for you to put that in for yourself. So the direct costs is what we were talking about initially, and I don't know if you all can see my cursor, but the number of employees. So in this instance, I just took an example and said that let's say that this is a project that's going to need a carpenter, an electrician, and a manager. And let's just say it's one of each. It might be 2 electricians, 2 carpenters, but you would put in how many employees you have, and you put in the hourly rate. So I just, as an example, said the carpenter is going to make $35 an hour, an electrician at $40 an hour, and a manager is going to make $45 an hour. Now, if you had 3, let's say 5 carpenters, that example I gave earlier of a blended rate, let's say there were 5 carpenters, 2 at $40 and 3 at $30, and I got that average of 37, that's what you would put here instead of 35. Now, if you wanted, you could put 2 carpenters at 30, 4 carpenters at 40, or whichever it is. You can add lines to this, add rows. This is an example to help you begin these computations. Then, how many hours per week is each person working? Your carpenter is working 40 hours a week. Your electrician, you're paying and you're expecting for this contract to work 30 hours a week. and your manager 40 hours a week. So the hours for all your employees is here. Now, again, if that was 2 people here, this would have gone to $80, this amount here. Now, I'm going to break down these amounts in the next slides, but I just wanted to show you these are the direct costs. So we're talking about the direct costs. So can you put a 1 in the chat if that made sense? If there were any questions, everybody understood where the direct costs come from, and these are all numbers you input. And this is the beginning of the computation for our labor costing. So great, thank you everybody. Everybody's with me, it looks like, or the persons who put something in chat, thank you so much. So the next part are our variable costs. And what I've mentioned earlier was these are, what we're going to talk about are the government obligations. The government, the things that you have to pay for every employee. And so I have used 1.75, and I put this in the orange, yellowish orange, because this could change if you have more employees. So depending on your payroll tax rate, and everybody should know what theirs is as your employer rate, this is the lowest at 1.75, and so you would have 1.75% times each person. So what I did, as you may have remembered from the prior screen, when we multiplied out per month, the carpenter would make $1,400 per month, the electrician $1,200 per month, and the manager $1,800. I'm sorry, this is per week. This is per week. So this is based on the number of hours that they worked per week at their rate. So at 1.75%, the carpenter would, the employer would have to pay $24.50 for payroll tax for the carpenter, $21 for the electrician, $31.50 for the manager. This is not their portion of payroll tax. This is your employer portion, because this is part of your cost. Social insurance is $35.92 per week. And so you would want to include that, of course, for every person. Of course, the employee matches it. At least right now, we know during COVID, you may have that suspended, but we're going to put it in to just as if you are paying it. Now, health insurance, everyone may have a different type of health insurance policy. What I use is half of the HIP rate. So HIP is the 429, I think it is 429, and so you would pay half of the health insurance. So whatever your health insurance premium is, as the employer, you are responsible for half of the health insurance, unless you pay more or less. And this is again in yellow, yellow is orange, because this would change based on what you pay for your employees for health insurance. And then this is divided by 4 for each week. So the 214.62, if that's the type of insurance I have for each of my employees, I divide that by 4, and that's the weekly amount, $53.66. Pension at 5% for each employee based on their total salary. And that then gives us the total variable cost of 184, 170.58, and the 211.08 for each person. Now remember, we said that the carpenter works 40 hours a week, the electrician 30 hours, the manager 40 hours. So when I divide the 40 into the 184.08, you will get $4.60. Similarly, dividing 30 hours into the 170.58, you get $5.69, and that's the variable overhead rate. And then for the manager, 40 into the 211.08, you get $5.28. So keep those in mind, because that's building our variable rate. So we've got 460, 569, and 528. Now we've got our direct costs. And just want to make sure, yeah, I covered everything. So for our direct costs, we are looking at the rent, the phone, utilities, insurance, permits and licenses, and miscellaneous. And these will change based on your specific amounts, based on your specific business. So your rent may be more or less than $1,000 a month. phone, so forth. So that's why this is highlighted in this color, because these are amounts you enter. So these are just example numbers. So adding these all up, the total overhead is $1,580. One-time training, and again, this is a hypothetical example, but let's say that some people need a little bit of training, or you have to spend some money on something to get them started. Let's say you also have some uniforms or PPE you have to buy for them. So let's say that's $655. So your monthly cost is $1,580 for your business. And if this is what you do for your business, the $1,580 based on the 440 hours per month that we got from the number of hours for all your employees. And again, we're looking at monthly because the overhead we're looking at as monthly. When we divide the 440 into the 1,580, we get $3.59. So that is your overhead rate that you're going to add to each employee. Now, the one time is training, uniforms, and PP&E of the 655. What we've done here is, because that's one time, it's going to be divided over the entire time that the contract is going on. And so let's say it's going to be a 4-month contract. So the total hours, that's 440 times the 4 months, it ends up being 37 cents for the total for the one-time items. So when we look at the total cost, and I just realized the line that did not show in here, and my apologies, I'll need to amend the presentation, is profit. You need to make sure that the profit is in this computation as well. And so that profit number is pretty much a variable number, but we would add that profit percentage to your total when you come up with your rates, because you want to include a profit margin in your rates. So you would take your total rates that you've come up with. You could also take your flat rate, but you want to make sure we add profit into your computation, because of course you have to cover your costs and then you have to add in profit. That may be a 5% number for you. It could be 10%. It could be 3%. I would suggest no less than 5%, but you may want to look at what your historical profit has been, and you may want to look at what you've done in the past and decide what your profit percentage is going to be. So this is the same sheet we had looked at earlier, where we talk about the direct costs. And now, and you see we had used some of these numbers. Here's the 440 hours, the weekly cost, the monthly cost, and you'll see that we have the variable overhead rate that we talked about, the 460, the 569, the 528, the fixed overhead rate, which is the 359, and then the one-time fixed cost of 37 cents. There you have now your total hourly labor rate, and we would increase that by a profit percentage, whatever that profit percentage is that you are going to add. Now, before we go on, just in case there's anyone who we want to maybe cover machinery just quickly, because I think with landscaping you may have some machinery or equipment that you might include, but we can go through that quickly. Are there any questions? Let me stop and pause and see if there are any questions so far. If everything has been clear, that's great. If there are any questions, you can put them in the chat, or if you want to unmute, that's fine as well. Everybody's good. We'll put a 1 in the chat if everything is good. No questions so far.
Yeah, hi Joyce.
Sure.
So I think this slide brings it all together quite nicely, and I like how you've built up the understanding on the direct marrying with the variable to come to a total, obviously plus profit. perhaps speak to, Joyce. I'm just thinking for any attendees that saying, hey, yeah, you know, I kind of get it, but it's a bit much, all it, you know, and I got to work it to understand it, and it's visual now. Just talk a bit about the schedules, the cheat sheets, the fill-in templates that will go with this, that will be available to any attendees. Now might be a good time just to touch on that.
Sure. And actually, what I can do is bring it up for you. So let's see. I'm actually going to stop my share and bring in a new share because I think that might be the easier thing to do so everybody can see that. And what I will say as well is that with these spreadsheets, some people like using Excel, some people don't. So hopefully this is something that you'll find helpful. But if not, you can use whatever works for you. But this is Excel. And so this is the same spreadsheet that was just in the PowerPoint presentation. And this is where we're putting the numbers in. So for example, let's say I put in 2 employees, and like I mentioned, you see that it changed to 80 hours. And so what this spreadsheet will do is it will calculate these amounts for you so that you come up with the rates that we were talking about. And you would put in, if the, right, we talked about a blended rate of $37. And so you see that the amount changed for the weekly cost and the total per week, the total per month. The variable is changed a bit. Before this was $43.56. Now it's $45.70 because the rate is 37 now instead of 35. If I bring that back to 35, you see it goes back to the 43.56. And similarly, this is 1.75. Some employers are at a different rate, 3.5 or whatever, based on the type of business they are. So if this was changed, let's say health insurance, this is the 429.24, which is HIP. Let's say you're paying $500 a month instead of, you know, that you get a different type of policy instead of 200, instead of the 429, it's now 250. So that's half of the $500 premium. And so you see that the amounts will change for you so that all you have to do is put your numbers in these yellow highlighted areas. Similarly for rent, phone, utilities, you can add numbers in here. If you need to add more, you can add more. Let's say another, let's say something else for $600, and you see that amount below was added in there, and it changed the amount. So this is the spreadsheet that you can use when you put the amounts in. It will compute for you the total hourly labor rate with these variable and fixed overhead and the one-time cost. And I'm going to drop that. I realize I didn't drop the profit column in, so I'm going to make sure I drop that into this spreadsheet. So hopefully that makes sense. Can I put a 1 in the chat if that's good for everybody? Was that covering it enough, William, you think?
Yes, absolutely.
Perfect.
Thank you.
Perfect. All right. So there may be one person that may have the example of equipment. Now, in the Schedule D that I mentioned, there may be equipment that you use, but there may be equipment that you're actually charging the government for. Like they may, I think there's a project where they're going to be doing diving and working on foreshore, and maybe you're having to use a barge or something. Excuse me. So maybe that barge is something that you have to price and charge the government for. So similarly to the labor, you would think about, and so for the landscaping, there may be some things that you are charging government for certain types of, if you're cutting up trees or certain things you may have to do. And so I'll get to that. What should the deposit be for a project like the example? So let me think about that and I'll make sure I understand your question. So for machinery, it's similar. How many hours will you use the machine? How much does it cost to use the machine and maintain the machine? What's your hourly rate going to be for that machine? And over what period of time will you use the machine for the contract? And so we have a similar type of spreadsheet for machinery, like we do for the employees. And I've used a pump, a compressor, a truck. I'm not a construction person, so if these rates are way off, if any of you all do this, my apologies. But cost of using a pump, cost of using a compressor, cost of the truck, 25 an hour, 50 an hour, 75 an hour. Again, you drop those numbers in as to what makes sense for you, what you're actually, what it is for you. And then the hours per day, whether it's, so I just said the pump might be used 5 hours a day, the compressor 7 hours a day, the truck 5 hours a day. And so multiplying those, the 5 by the 25, the 7 by the 50, comes up with these numbers. And so then of the 850 of all the amounts for the equipment per day, I got a percentage. How much of this 850 is the pump? 15%, 41% of the compressor, 44% for the truck, and then for the week and the month. And so similarly to what we did with the labor, there's overhead per machine with the price or the cost per machine to come up with the total overhead. That's only if there was equipment. If there was labor, we'd have to blend those two together. But see, you see there's total machine hours for the month, total cost of the machinery for the month. And again, when we're looking at the overhead, we need to look at, I use the same overhead, rent, phone, utilities, insurances, there may be permits and licenses. So the total overhead, and then what that overhead is per machine. And we look at that to make sure we're thinking about this $4.65 that we divided by machine. So it's this 465, and we use these percentages by machine and applied the overhead to this 465 to get 68 cents, 191, 205, with the flat cost for use of each machine to get the total. So with machinery, think of all the costs, just like with overhead with employees. Have you added all of those costs? The main thing is we want you to put forward the best case for your business, to make sure you show that you've developed numbers based on actual information, good informed assumptions and estimates. And so ATL, you've asked, what should the deposit be for a project like the example? So I'm not quite sure what you mean by the deposit. You can unmute if you would like, or if you can put some more explanation in the chat for me.
When you say deposit, are you talking about an upfront, Rika, help me, what's our word?
A retainer?
No, what's the, Rika there? Rika, what's our word? Oh my God, what's our upfront starting deposit? What's our word? Slips me. I'm sorry, ATL, what are you referring to? You know, should the deposit be for a project like this? What do you mean by a deposit? You mean an upfront
Startup.
a mobilization fee, a startup cost? What? A startup cost. Can you explain it, ATL? Can you unmute yourself and speak to it? Do we understand that, Joyce? A startup cost?
Well, what I'm thinking, I know with some projects, you may have some costs that you need to get yourself going. So you may have to train employees, for example. You may have to open certain types of accounts or buy certain things, buy certain equipment in order to get started. You may have to get insurance and pay a deposit on insurance. So there may be some things, you may have to buy uniforms. I would say, so Erika said she's thinking that they're referring to mobilization. So mobilization, okay, great, yeah, mobilization, yeah. So, and William, you can let me know if there's anything I'm missing, but I would think you would need, I don't know if there's a percentage that you guys have looked at, but I think you have to look at what your project is and those things that you are going to need to do in order to get started. To say, okay, I need to do these 10 things, and what are those things going to cost me? To come up with an estimate as to what those things are going to cost. Is there any type of formula, William, that you've used for mobilization?
Yeah, I mean, we look at this a lot within our BDIC line of work, and it's not just construction, it's any various forms of service provision, especially dealing with the government. Many entrepreneurs, contractors are very sensitive that payment is going to be delayed for whatever reason. It's not going to be timely, and for the most part, that might be correct. And so it's always the thinking of, I need an upfront chunk of I need some working capital kind of start. Now, our procurement people on the horn, please weigh in if you so wish. But how I like to look at it, logically speaking, is that any entity, especially the government, procurement, any contracting agency that obviously, especially our procurement people and whoever's handling our contracts and agreements are very savvy at this, and it's acceptable and fairly normal in most situations, some to most, to request some sort of logical, acceptable amount of mobilization, especially as it pertains to purchase of product, like a painting contractor. They got $100,000 job painting the airport or whatever, and am I expected to buy all the paint out of my funds and then wait X amount of time to be repaid? Or could I also request within my negotiations and contractual agreements that I've got 5, 10, 15% that might be my mobilization funding that will enable me to go out and buy my paint? Would it be acceptable to put forward some sort of mobilization that would include some upfront labor before I start to roll one paintbrush, that I have some money upfront for some service that I have yet to be performed? I personally am always a little skittish with that, because most contracting agencies worth their weight in salt are going to pay for performance. You perform, you show the evidence of performance, and then that is all with the drawdown where I pay for you for work that you've done, as opposed to work that you have yet to do. But that's just kind of my experience over the years. But like I said, Ed, Elaine, if you so wish, sorry to put you on the spot. Let's see what's here.
It depends on the form of contract.
I'm sorry, go ahead.
I'm sorry, Ed was saying that it depends on the form of contract and associated risk profile based on the deliverables.
Yeah, so.
And so one thing I would say, and thank you for that, William, because, for some, it might be that you want to make sure you have a month's worth of salary, that you may want to think about, if you don't get paid for a month, and this is where, the procurement people may want to weigh in, but if you're not going to get paid for a month, your employees have to be paid either weekly, the week after the work is done. So you may want to think about, whether it's given or not. I think, things can be requested or thought about. And just like William said, cost out what the paint is, and the paint, at least for the first tranche, you know, or if you're gonna paint 5 buildings, and you know you'll probably do one in a month, let's say, and you're expecting to get paid after a month, then what is the cost of the 1 month's expenses that you're going to need to pay out for the contract? So that might be a way to begin to look at the amount, like William mentioned, 5%, 10%, 15%. You could look at a percentage of your contract, and or the specific items that you're going to spend, like in the first 30 days before you get your first check, your first payment. But you were going to add, William? I'm sorry.
Yeah, no, just simply that, you know, many construction individuals look to BDIC, look to our organization, you know, if they know that they've got a sizable contract that they've been successful in winning, then they know, you know, they're seasoned enough to say, I'm going to need this much working capital. I know that, you know, when I invoice, I'm gonna have to wait a month to 5 weeks or whatever it is, and I've got to have some funding, and it may be loan funding of a temporary nature, of a bridge nature, to hold me through until, you know, certainly the money starts rolling from the, you know, from the contract.
Any other questions? That's a good one. Thank you. And Erika, I don't know if there's anything else you wanted to add to that, or.
No, that's absolutely correct. I guess, well, I don't know if Elaine or Ed, I think Ed answered it, it depends on the form of contract, but it would be useful to know what has been the normal process for government contract.
And Ed, I see you're unmuted.
Yeah, just listening, and I do find this very interesting. Depends on the form of contract. Really, I'm referring to the pre-contract negotiations that you would have, and I would say domain to that would be the payment schedule that's included in contracts, right? That 10%, Billy, you're right on right there. Usually that's about what most contractors go for payments.
Great. And this, and I apologize, I don't know for that, but I don't know if this is included in the pre-qualification paperwork in any event. I think that would happen once the contract, once you're further down the road and know that you may be getting the contract, or closer to knowing you're being pre-qualified to then apply. But it's good to have, that's a good question. It's good to know.
Mm-hmm.
But it may not be at the point for the you may not have to include that in this round of things.
It's only once you're assured that you're going to be going into contract. And I would say here that not all government contracts offer upfront payments or mobilization fee, payments. Some of them, that's just not happening here.
Gotcha. Thank you for that. Are there any other questions? I think everybody hopefully is still here. I should have had everybody do some jumping jacks on the screen to make sure we're all still awake. But I think that covers all of the questions. I don't know if anybody had anything else. William or Rika, if there's anything else you wanted to add, but hopefully you all have gotten something from this. And if you have any questions, please contact BEDC. The information is on the site for in general for the forms, whatever, bedc.bm, which you've got to in order to register for this. And the forms and the checklist, the Excel spreadsheets will be available probably within the next 24 hours, I think you were saying, William, on the site?
Yes, that's right. All things being equal, our webmaster. Yeah. Joyce, can you bring back up your presentation, and specifically the unit rate sheet?
Absolutely.
Yeah. And I had a question, Joyce. If someone is not familiar with Excel or doesn't have access to Excel, to utilize the templates, conceivably they can follow the same process just by either, writing it out or typing in Word or something like that and using a calculator?
Absolutely, absolutely. And I did put some notes in what I can make sure I do. Now that you said it, I can make sure I explain how the formulas were developed. So I can put some notes in the spreadsheet that, just in case it's not 100% clear that I multiplied that by this to get that. So, the total per week is based on the hours and the rate, but I can put some explanation on, because you're right, this is easily done with a calculator, very easily done with a calculator. So thank you for that.
Yeah, thank you, Joyce. Joyce, specifically the Appendix D checklist rate sheet, the one that is actually
From the website?
No, I thought you had it in here. You didn't. Yes, there we go.
Yeah.
Okay, so this is the actual document that is within the stimulus pre-qualification submission package. All of the other information we walk through sheet by sheet, page by page, within our general documents virtual session, which is started at 9 this morning. We had a 2 o'clock session, and we're having a 6:30 session this evening, and that's handled by Tika Gilbert. So Joyce is just dealing with some nuts and bolts, and she's been a bit prescriptive and detailed about a thorough understanding of how to develop your unit rates. Now, the Ministry of Works is quite happy for you to just write out, just kind of handwritten, what your rates are. And if you don't see yourself there, I think they've got everything, skilled labor, unskilled, mechanic, this, that, and the other. So from as far as seeing yourself there, then, we think that you should see yourself. Now, if you don't see yourself there, then we would appreciate a email or some sort of something that say, hey, the schedule is deficient of X, Y, Z, and we'll push that on the Ministry of Works. And that may be part of a next addendum, updated information that's valuable to you, that you want to be aware of before you submit your pre-qualification package. Now, this is the minimum requirement. And so we talked in the other sessions, Tika covered the various ways that this is not a fillable submission. Let me just say that, okay? So they don't do that. You can, and what they say in the first addendum that's posted now is that, you take the information, they're PDFs, you print them out, you fill them out, and you scan them back. Okay, well, that's great if you want to do it by hand, but if you want a digital submission, like Tika did in her presentations earlier today, then whether it's Acrobat Reader, some edit function, some publisher, some special software, manipulation to take their document and allow you to just type it in. Okay, that's on you. And we provided in the other session some strategies to do that. Okay, and so if you want to type in your rate or write in your rate, great. That is the minimum quality submission. Now, if you want to be able to say, well, here are my rates, and I want to, as a part of my brand, as a part of my extra mile service, as a part of my quality submission, be able to include anything that you've heard or seen that you feel is great for you within Joyce's presentation. If you want to add to just filling in this rate sheet, that's totally on you. But just letting you know that extra information is accepted, is happily, thank you very much, but the minimum submission is filling out this sheet. Wherever you go from there is your creative liberties and freedoms to be able to brand your business and your submission in line with what you want to achieve. What you want to achieve is to be on the pre-qualification list, to be successfully, get that email, you have been pre-qualified, and so that you are, certainly in the runnings for the next phase of however they're going to divvy up this 13, 14 million bucks. That's the program. Okay, so I just want to, because we talked about that in the other sessions, This is our first session with Joyce and the financial labor rates. Minimum, just want to be very clear on the minimum submission, but if you want, and certainly if you're editing any, if you're editing this sheet, you can add to it. You can add to it with extra sheets. If you want to write it in by hand, you can say, yeah, these are my rates, but please see attachment and whatever's on your attachment to give more detail. Totally up to you.
Awesome. Thank you for that, William. Well, that wraps things up. I think we are right at 6 o'clock. So Erika, William, I don't know if there's anything else you want to add, but we thank you so much, everyone, for being with us this evening. And I don't think I saw any other questions in the chat. So thank you very much for your time.
Just before you end up, Joyce, because we have, kind of 4 or 5 or so been with us the whole time. So Michelle, not to put you on the spot, did you have any specific questions, Michelle?
Thank you. No, nothing right at this moment. Only to say that my participation right now is to observe. I'm more offering administrative type services should any of the membership need some additional services. So I'm just trying to get myself familiar with what's going on. William, maybe you can slot me in for the 6:30, possibly?
Or you can just register that yourself, Michelle.
I can do that right in? Okay.
Just go to our website, and as Erika mentioned, you're going to see 2 silos of information, the general docs and Joyce's financial, and you go into the general docs, all the drop-down tabs. You can pick your time, and you get an immediate link to the site. Okay,
super. I'll do that, because I know that not all the business people, they're too busy doing their craft. So one thing, it's cumbersome for them. It's easy for us, but it's cumbersome for them. So we'll just see what happens. Okay,
no,
thanks.
No, absolutely. Yeah. And we have financial service providers on our website for those of you that are in need of finance or accounting people. And, certainly Joyce is one of them. And so feel free to, you have Joyce's contact details here. So feel free to reach out if you need any extra communication with Joyce.
Awesome. Well,
Erika,
thanks again, everyone.
Any last words, Erika, just before we end up, Joyce?
I think this is just a great opportunity for those in the construction industry and the trades industry to be pre-qualified, and I would just encourage everyone to make an application and take advantage of the support that's there to help them to do a solid application. And thank you, Joyce, for assisting.
No worries. Thank you for having me. And I wish everyone all the best, hopefully. And I think that's great, Michelle, that you're offering that service. And thanks, guys from procurement and works engineering for being on. And Katina, William, thank you again. And Erika, thanks for your questions, ATL. And have a great evening.
Okay, great. So Joyce and Katina, can you just stay on for 1 minute while we have you here? Thanks. Thanks all. Okay, great. Fantastic. Joyce, 1 down, 7 to go.
Yep. You can probably turn off the recording.
Yes, that'd be great. Yep, don't forget that, Katina.